Good evening traders, welcome to the FreeFX video. Today we're bringing you the Euro Pound. This cross is very interesting to some of you. The Euro has been an interesting pair and the Pound certainly has had a lot of interest. Both combined give us unfortunately a very mixed picture, and one that is certainly an interesting and difficult one at the same time. First of all, the monthly chart in front of you shows you a number of things. The channel that you see from 2008-9 down to 2014-15 was working, and it was broken at the beginning of this year, and it takes us into new uncharted territory. The resistance that we saw from the three tops highlighted has actually taken us down finally this bear trend. So if we isolated the bear trend without the channel, this is what we would see, a bear trend. Now ignoring the channel means that we could carry on forever. So where do we stop? Hence the question mark. Does the bear trend continue? Is it just figuring out where to go next, or what the next catalyst in the market might be? If that were the case, would it come from monetary policy in the European Central Bank, as it did in February here when it broke the channel floor when the QE was announced at the end of January and then subsequently implemented? But it wasn't enough, because we are now above this very important level, 72. It's important here, and looking back we can see that it was important before, back in 2003. So that's 12 years of price action. And if we created a triangle, we'd see that 6 years takes us to this peak, and then another 6 years takes us to this bottom. So we have 6 years to get to the top, another 6 years to get back to that 72. Okay? So we haven't really done a lot of progress historically. We're back to where we were. So this almost divides the chart into two, okay? And that's the midpoint, if you like. Unfortunately, there's no symmetry here, because this fantastic meteoric rise was not matched by a meteoric crash. The crash came in gradual steps, so we cannot measure this cycle like for like. But certainly if we ignore this first half of the chart and started here, what we would see would be a cycle of waves through this channel. Top, bottom, top, and then crashing through the bottom. But have we actually broken through, or is it a breakout or a fake out? Well, we may see a reversal back up. We are not sure. But there are a number of conditions. One, fundamentals. The European Central Bank is embarking on a massive quantitative easing cycle. Therefore, we cannot see how it would be attractive to invest in the euro, and certainly we do not have much return from the European bond market. But this is where it gets interesting as well. Here is the chart for the DAX, the German index, the German 30, and also we have the euro dollar. The euro dollar is the, if you like, ultimate measure for Forex markets, a very liquid pair and a very strong barometer for the euro sentiment. And the euro dollar is up here. But look at the German equities. We're down here. So we could say that as the euro has risen, the sentiment in investors has actually dropped. So return is actually quite low. Now, are we buying from the bottom here in a hopeful yield? Well, perhaps, but we're not really necessarily going to think that this is positive for the euro. As you can see, the correlation is inverse. So as the equities begin to rise again in the DAX, the euro is descending. So if the DAX were to rise more, the euro would descend more. And this rise here that we saw from 2010 to 2013, well, it was matched by an inverse correlation here. Useful to look at this, not necessarily going to give us the next direction for our trade, also depending on your time frame, because obviously we would change that to a monthly, which we cannot do now because trading is closed. So this is where we are with the euro pound. Therefore, our next question is, if the 72 level is significant and we are above it, would that signal run up to that former channel top? Well, perhaps, and here's my question. What would happen if we didn't? And how would we position for that? Well, okay, so the European Central Bank has begun its quantitative easing, and certainly the markets had positioned for it already, and they were ready to let the euro devalue. But now we had the uncertainty over Greece, and this has continued. So again, that has not been resolved. It's taken quite a long time, because with a simple quantitative easing, we have a devaluing of the currency, and that's almost a linear condition for the market to interpret. Devalue the currency and sell it off, and down we go. But then the European situation, complicated by the Greek exit or Brexit, made it almost impossible to predict which way it was going to, which fork in the road it was going to take, and it has not been resolved, and Greece may be going into a referendum over Europe, just like in a way the United Kingdom may be in 2017. This has led again to uncertainty. Has the Greek crisis been resolved? Yes or no? So we have three dojis almost, one after the other, and we're stuck between these levels: 72, which is this former supply now demand zone possibly, this which is a 200-day moving average on the monthly chart, not the daily, the monthly chart, so just getting our references right, which is now above 73. So we're underneath that, and we're above 72. So we're just over 100 pips. Okay, it's a very tight space, and we have this channel floor, which comes down here at 74. So we're stuck in a sort of 200 pip range, which is awash with these significant levels. And clearly there isn't enough sentiment to move this past these roadblocks and give it enough momentum, volume, and conviction to not just break through but to continue in a move. So this breakthrough that we had in February has actually stalled, and the question mark remains, where do we go? Do we go back up this channel floor and back above the 200-day moving average on the monthly chart, or do we accept that we do not have enough strength in the bulls to fight these levels and just continue to stay in this very narrow range? So we could see breaking back up this channel floor, but then not really breaking up and again coming back down to 72. So we had to be cognizant of the fact that this may not be a definite move. It could be a fake out. Now, going back to the four charts here, we can see that we have the euro pound, and I just thought this may be a significant one to show you, because we are always looking for correlations with a cross like the euro pound, and sometimes you find obviously it isn't just the case of correlating it to the euro dollar. Here's the euro pound, and with the euro pound we have the pound dollar. This is the pound dollar, the main chart. Okay. So the pound dollar is actually not moving at all very much. From the 2008-2009 financial crisis, where we crashed down to here, 140 roughly. Okay, so let's put some lines on this just to kind of see what its direct neighbor is doing. So we established that the euro pound and the euro dollar are tightly correlated. Here they are again, the euro pound in blue and the euro dollar candlesticks. Okay, so they've both broken down their respective 200-day moving averages, and they have a strong correlation. So we know that the euro pound is driven by the euro dollar. At least on the monthly chart, this is quite clear. But as we go into the pound dollar and the euro pound, we do see some similarities, but also some divergences. Like here, this trough and this peak are inverse. This rise in the pound dollar is matched by a drop in the euro pound, and then there's a correspondence here. So, in other words, if we looked at this, we might think that the euro dollar is driving the euro pound. Okay, so the shape here is matched by this shape. And then if we looked at this, we might think that recently at least, it was the pound dollar that was driving the euro pound. So it's quite difficult to know which one to follow. Do we follow the euro dollar for direction? Do we follow the pound dollar? Which one has the most significant drive? So if we were trading, for example, the dollar against the euro, we might obviously say, well, the dollar is about to hike its rates, so obviously the euro is the loser out of the two, and this break below the 200-day moving average of 122 is, going to possibly continue with further drop down to maybe parity to 1.0. Okay, so that's one scenario. The other scenario is the pound dollar, where you might say, well, so if the euro dollar isn't driving the euro pound, could it be the pound dollar, and which way is that going to go? And the pound dollar, obviously, we've had the election, and that's, that's this period here was the uncertainty in 2014, 2013, 14. Will the Bank of England raise its rates? And Mark Carney came in to replace Mervyn King as the governor of the Bank of England. There was a lot of optimism and talk of trying to front-run the Bank of England's talks of raising rates, and eventually the market came to a realization that this may not actually happen as soon as they might have thought, and then phase two, the big drop back down. Okay, so we crashed back down. So if you look at all of this, actually, we haven't really moved much, because that was 170, and that was 170 back in 2009, and this is the floor at sort of 150, let's say, and here was 150 as well. So in about 6 years, we haven't really moved much at all, and this incidentally is the same period as the Fed has not raised its rates. So if we look at the pound dollar for directions, well, the dollar says it's going to raise, the Fed says it's going to raise its rates, the Bank of England says it's going to raise its rates. They're both quite equal in uncertainty, and certainly we haven't moved that much here, and we're not sure. So having taken all these things into consideration, how can one trade with certainty, with absolute conviction, the euro pound, where the euro dollar is essentially bearish, but the pound dollar is a sort of static creature at the moment? So the only way to be sure would be to have absolute certainty that the pound couldn't really drive this pair, and if it did, it could drive it only if the pound were particularly hawkish, and the euro continued to be bearish. So I would approach this with caution and try to really look at confirmation before trading it one way or the other. Unless you're a short-term trader, in the longer term, this needs to resolve itself one way or the other, whether with the Grexit, the Greek situation resolved, or the Bank of England raising rates, or something of that kind. Thank you very much for watching, and have a great weekend, and I'll see you soon. Thank you.